Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. What does a fractured world look like? Well, that's one of the economic scenarios painted by Oxford Economics in its latest study as it looks into the crystal ball for key trends shaping the future. And these scenarios help businesses understand how they are affected by the long-term effects of key structural megatrends. And to help us out, we've got McFee. He is the Managing Director of Macro and Investor Services at Oxford Economics. Ines, thanks for joining us today. How are you doing?
Very well, thanks, Ryan.
Quite a timely conversation to have because when you look at the news cycle and what's been playing out in the past few days, weeks, months, a lot of volatility in the markets and the economic outlook. Help us paint this picture of a fractured world. How has it played out for you so far?
Yeah, that's right. So I think obviously we've got a lot of the news flow is very focused on protectionist measures, kind of nationalist economic policies all around the world, really. And the first scenario that we modelled delves a little bit deeper into that and says, OK, well, what if this plays out over the long run? How will that shape the global economy? So it's really a scenario in which we envisage effectively populist policy, so disregard for fiscal discipline, heightened geopolitical tensions, increased barriers to goods and non-goods trade, increasing over time and affecting the economy. At the same time, key policy institutions are undermined, such as central banks and other economic policy institutions, and that leads to an erosion of trust from society within them. And as a result, you get different impacts like entrenched higher inflation expectations, which become self-fulfilling. You get higher inflation, but also higher interest rates and generally higher risk premiums within financial market assets.
Gosh, Ines, that's a lot for a business to worry about. So in terms of a game plan, what should they be looking out for or doing to navigate these waters?
Yeah, it's a good question, Ryan. I think, first of all, it really matters on what type of business we're talking about. But for those corporates thinking about this type of scenario, they'll be trying to think about, which countries they operate in, what the institutional setup, what the political makeup of the country looks like, and to what extent it'll be a little bit more insulated from some of these forces. To the extent that supply chains are really disaggregated, thinking about consolidating some of those, maybe taking on perhaps higher levels of cost now to ensure a more sustainable way of operating in businesses. But also, I think for more financial institutions, they'll be thinking about how insulated their portfolios are and their lending is to higher rates. And also to what extent different asset classes can give them different diversification benefits.
Yeah, and all the talks about tariffs definitely will have an impact on supply chains. And that's one of the scenarios you have painted, a fractured world. Moving on to the next is what's called the technological revolution. So, of course, with all things AI, it does also bring opportunities as well as disruptions. What are we looking out for here?
Yeah, that's absolutely right. It's overall a pretty optimistic scenario, so one in which we see the adoption of generative AI and machine learning techniques really throughout the global economy, driving productivity gains, helping to ease some of those geopolitical tensions, which at their fundamental base are around frustration at the lack of improvement in living standards, but technology, insofar as it helps to drive productivity, can actually reverse some of that frustration. And at the same time, it can lead to slightly lower inflation as we see growth rise, but the costs of that growth and the input costs start to fall back. Fundamentally, this world is not without its challenges. You would obviously see a fair amount of labour market disruption, so potentially more job creation at the very top end of the skills distribution and at the bottom end, and maybe a little bit less in the middle as some jobs become augmented by AI and some jobs start to disappear. And that will be one of the key challenges in this sort of scenario, is to see government policy really supporting that transition of the labour market.
Yeah, and it's talking about government policy. So this technological revolution also kind of plays into your fractured world scenario where you have maybe national interests at play, national security measures, which is probably going to make things more fractured in that sense.
Yeah, that's absolutely right, Ryan, in the sense that we often focus on things like tariffs as a way of expressing protectionism, and they're a really obvious way of expressing that. But it also plays out in different technologies. So to the extent that the US and China might limit each other's access to strategic industries, around semiconductors, but also AI. We're obviously seeing a tussle between the US and the Chinese tech companies at the moment. And to the extent that there are barriers put in place about the knowledge spillovers between those countries, that can also have a damaging impact and a significant impact on economic growth.
All right, and as we've covered two of the scenarios, and the last one on the table is what's called circular stagnation, where you are looking at a slow growth future with weak investment and innovation. What are the odds of this happening? Because you're talking about technology failing to deliver the expected gains.
Yeah, that's right. I think this is a scenario we're all very worried about in the 2010s. This is a scenario in which, you see productivity continually disappointing, and so weak investment, weak innovation by companies. And that's also being compounded by the ongoing aging of the population, which is also something we face to some degree in all of these scenarios. As a result, you see weak inflation and nominal interest rates fall back down to the lower bound over time. I think this remains a very live scenario for the global economy, and in particular those economies that are aging very quickly. I tend to be an optimist on technology, and I think what we've seen, even though, as you rightly point out, we see a little bit of fragmentation, I tend to think that overall the chances are pretty good that generative AI and machine learning tools are going to help to revolutionize the economy.
Do you see any countries or economies in particular facing this threat a bit more than others? Because I'm also even seeing this play out in China, where the population is aging.
That's right. And China is obviously at one end of the demographic spectrum. That's where technology can really be a huge boost, and some of the impacts on the labour market would be mitigated, of course, by that ageing population. India, for example, is very much at the other end of the spectrum, with a very strong growth in the population that's set to continue for many years. Europe obviously sees similar, is closer to China in terms of the demographic challenges.
All right, lots to watch out for in the future. We've been painting what it looks like, 3 key economic scenarios shaping the future, painted by Oxford Economics. And helping us out this morning has been McFee. He is the Managing Director of Macro and Investor Services at Oxford Economics. Ines, thanks so much for your time this morning.
Thank you, Ryan. It's been a pleasure.
Great chatting with you. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.